All right. Welcome to another episode of From Frackhand Financial Freedom. All right, I got a good one for you today. I got a really good one. Let's get right to it. Today we're going to be talking about, as you can see, the title. The title said, "Pay attention to the economy, build wealth." Absolutely, that's what one of the leading indicators in which forms the direction of the stock market. So what we're going to talk about today is leading economic indicators. We are also going to talk about lagging economic indicators. Okay, so things that you watch. If you see these things, three things happen first, you need to start. We need to start paying attention. You see these next three things, then, and if it's not good, then that's really going to be something you need to pay attention to. But it prevents. Excuse me, prevents. Oh Lord, what is? All right. It presents a big opportunity for us investors. All right, so let's talk about it. Let's go. All right. So, first thing that we're going to talk about right out the gate, let's get right into it. So, we're going to be talking about leading economic indicators, lagging economic indicators, and the three bullet points, what they mean, how they work. Let's jump into it. So, I got pulled up here a great article, leading indicating indicators right here. So, this is what it means. This is the definition of it. Uh, Leading economic indicators are metrics that change before the economy starts to follow a particular trend. Pay attention to that. All right. So these indicators are used to forecast economic activity and are considered predictive in nature. So these indicators that we're going to be looking at, these are, I mean, you can predict something is going to happen the way that these indicators are, where they are. You know what I'm saying? You can kind of predict what's fixing to happen. So there's three bullet points. Three bullet points in the leading economic indicators. They are stock prices, building permits, and consumer confidence index, what we call the CCI. All right. Stock prices, we all know those, right? It says here rising stock prices can indicate future economic growth as companies are expected to see increased profits. So stock prices are going up. You know that it's a good economy. Everything's growing. Building permits. It says here, building permits signal potential future construction activity. Of course, yeah. If you see building houses, buildings, businesses, everybody's building everywhere, that is a good sign of a growing economy. Next, Consumer Confidence Index, CCI. So what this is this reflects consumers' expectations for future economic conditions. So Walmart and all these stores that we go to, if they report their earnings every 3 months, and if they see spending going down, we are consumers, we buy. If they see spending is going down, it'll show in the CCI. It'll show. So that's what the CCI is. All right. So if you got to write that down and look that up, pay attention to that CCI. All right. So next we're going to talk about lagging indicators. These are the next three things that if you see happen in the economy, then it's fixing to get really ugly. So it says lagging economic indicators. Let's learn what they are. They are metrics that change after an economic trend has already been established. So if the economy was just going up, going up, going up, and something changes, all right. So this is what this monitors. All right. There's three bullet points, three main good. If you got to write this down, I want you to really look this up on your phone. These 3 points I'm fixing to talk about now. All right. They're GDP, which is the gross domestic product, like we all learned in government and economics. Yeah. Government and economics. Yeah. All right. Who gives a damn? Right. Unemployment rate and corporate profits. All right. GDP That's the banger right there. So this is what it does. It measures, or it is a measure, excuse me, of the value of goods and services produced in an economy. So if things are not selling, people are not buying things, people are not buying products and stuff like that, it's going to show in the GDP. And it says that it is considered a lagging indicator because it reflects the economy activity, excuse me, that has already occurred. So we're monitoring things that has already happened. The GDP will tell you if products and goods and services are not selling, or if they're going up, or if it'll tell you a lot in the GDP. All right. Last is corporate profits. Like I told you about that. These these companies, these huge companies that we like, big Apple, Microsoft, all these the S&P 500 of the biggest companies. Every 3 months, if you are publicly traded, you have to report your earnings. And so these companies report their earnings, and they're either going up or they're going down. They're either making money or they're not, or they're losing money. And they also talk about guidance, which is what we see in the future, because the stock market is always about 6 months ahead. They're looking 6 months ahead. They want to know what's coming down the road. All right. So those are the leading indicators, lagging indicators. All right. And so I wanted to I wanted to pull up something, and I wanted to prove my point on this. So the way this can present an opportunity for us as investors, as in traders, because this is a financial channel, of course, and I want my community to know how to trade and how to invest and how to grow their money. So check this out. So I pulled up the SPY. Okay, this is what we call the SPY. This is the S&P 500 right here. This is all of the companies. All of the 500 companies is in this one index. So I want to show you something real quick before we get out of here. If you look right here at this chart, this is pandemic. This is what I'm talking about. This is during the pandemic. So right here, if you look, right, 2019 we were just slowly moving up. The pandemic broke out. I don't know if y'all remember. I'm sure y'all do. The pandemic broke out, and look what happened. The SPY came from, let me see. Excuse me, move that out the way. All right. It came from $339 all the way down to $218 because the bottom had fell out. And for my investors, not trading, investors long term, that is where you want to buy, right there. That is how you make money in the stock market. You buy these things low. You buy them when they crash. That's why paying attention to the economy builds a big, huge opportunity. So if you've been saving and you got some dry powder, which we call capital, on the side, oh man, when the bottom falls out, boom, we go in right here, pick him up at $218, and then she's off to the races again because it comes up. So I just wanted to show y'all that, and I just wanted to go back. Remember, this is what we talked about, what we learned. Let's recap. What we learned today was leading economic indicators, lagging economic indicators. And the reason you want to monitor this is because this could build wealth for a long time. You could be a first generation, whatever. Sky's the limit. All right. So that's why you want to monitor the economy. That was I think that was a good episode today. What do y'all think about that? Let's go. All right. Leading economic indicators, lagging. All right. Have money ready to go. So when these companies come down on a sale, we go in and they take back off and we're on the ship. You know what I'm saying? So that was a good episode today. We're going to get out of here. Your boy Lo Trey from Frackan to Financial Freedom. Great message. I think it was a great message. Like, subscribe, hit your notification bell so it'll notify you when I post another video. So till the next time, everybody be safe. Everybody be safe out there. It's getting crazy. It's getting crazy out there. All right. So everybody be safe. Like, subscribe to the channel. We're gonna learn how to trade. We are going to learn how to trade. I haven't even started putting up charts yet. All right. Be safe.